In this video, we're going to talk about a very specific type of crypto arbitrage between two crypto exchanges on perps. So I'm going to explain what crypto arbitrage is, explain the common SPOT-PERPS arbitrage, and explain how you can do perps arbitrage in this video with something very cool on Hyperliquid plus Ostium, but you can do a couple of other examples and there will be other videos like that. So first of all, arbitrage is basically trying to find price discrepancies, price differences for the same cryptocurrency across different exchanges. And usually what happens is that, for example, that happens on chain when you have Ethereum, say ETH, on Polygon and Base. So you have two different chains and there might be a small difference. There might be a difference of like half a cent or a dollar. And when you try to buy, bridge, and sell on the other L2, then you're going to capitalize on this difference. So that's one cool thing. Usually on larger crypto exchanges like Binance, Maxi, that rarely happens. Most of the arbitrage right now is on this kind of bridging across different chains. But there's something very cool if you look at funding rate. So if you look at the exchanges, then there's something called funding rate, which basically is trying to give the price as close to the spot price as possible. So what you're trading on like Hyperliquid or Ostium are not spot holding, so you don't hold the ETH, you can't withdraw it. This is a contract on top of Ethereum. So what it means is it's somehow related, and it's related by the funding rate. So the more they're trying to basically imitate the fact that this isn't Ethereum and there's additional fee on top of everything. That's depends on how many people are actually longing versus shorting. And if there's like many people longing, then longs will pay shorts, and if there's like many people shorting, then shorts will pay long. In this particular example, we're looking at Ethereum and you see the negative minus 17 rate. This means that shorts, the people that are shorting, are paying basically 14% in annualized fees or 0.017% per hour to longs, to people who are longing. Now you can look at the same thing on Ostium and you can see that it's 0.0024. So hey, you might start thinking that, hey, there's a difference, not only in price, because of course you can see the difference that it's basically a $1 difference. That's already cool, but you probably wouldn't be able to capitalize on that because that would be super fast. You have to click around in order to really do that. Usually people do that with bots, and the crypto arbitrage I'm going to show you is actually entirely doable manually. Because we'll be looking at, first of all, this kind of difference between funding rates on two different exchanges on the same asset, but also what's really crucial, we'll be going after exchanges that have potential airdrop, which is very crucial here. So funding rates, that's explained. This is for basically maintaining everything related to the contract prices and underlying asset prices. So as you can see, they serve as a mechanism for fund exchange between long and short traders, adjusting the cost or profit of holding contracts to keep the contract price close to the underlying assets. And as I've mentioned, usually if there are positives, long are paying shorts. If negative, shorts are paying longs. Now, the common strategy that there is with this kind of SPOT-PERPS arbitrage is that you hold the spot and you buy the same thing, you short the same thing on the exchange. This works only if the funding is positive, so this is not the case here. So if there are more people actually longing, shorting than longing, and you have the positive funding rate, longing than shorting, and you have positive funding rate, which means that if you start shorting, you get some kind of a fee, and on top of that, you hold the spot, so you have both short and spot for the same amount, which means that whatever the price goes up or down, you're staying neutral. You have a delta neutral strategy. This is the name of the game. So the price doesn't matter for you. Of course, it matters for the liquidation, but if you have enough margin, it doesn't matter. So this is already cool. If you see the positive funding rate, you can try to do it, meaning short, for example, on Hyperliquid, and then buy the same amount of ETH on Ethereum, on Binance, let's say, or just directly through Uniswap. And this way you will always stay neutral, but you'll profit from the funding fees, and this is basically what you will get. You get up to like say 14-15% per year, which is already cool. I mean, this is something you have to observe, so there are probably better options on chain. Now, what we are playing for is even better thing, because we're playing for perps arbitrage. So even though the differences in the funding are not that big, so again, we're trying to do the same thing. We'll be shorting on one exchange. So you short Ethereum on one exchange, say for 1 ETH with 20x leverage, and then you do the same thing on Ostium, but here you long 1 ETH with 20x leverage, and you profit from the difference. So you have to see which one is paying which more. In this case, it's more profitable to actually long on let me check. Long more on Ostium. Short on Ostium, because short positions receive a funding of 0.023, and you're going to pay a little bit less shorting on Ethereum. So you short here, long here, this is what you're going to pay, and basically profit a small difference is going to be 0.007, so it's like 1% probably per year, not really much, but this is not what matters. What matters is that this position is delta neutral. You can get liquidated on the other exchange, but then you close the position on the other and you have the same amount of money, but you're earning points for both of the exchanges, for Hyperliquid and Ostium, and there's going to be airdrop for Ostium that's confirmed, and there's going to be at some point season 2 for Hyperliquid, because Hype token is already out, but there's going to be season 2. This way, what you're doing is you're having a delta neutral position. Ideally, you're making some money on funding rates, or maybe not losing much, because that's the ideal scenario. Sometimes the differences are really much bigger than right now, but even still, you can see that there's very, very small difference here. So that's already cool. And the thing is, you can really earn points this way on both Hyperliquid and Ostium and really farm the airdrops. And this is where you're trying to really do the arbitrage. So I think this is a very cool arbitrage in crypto that you can do manually. Of course, bots help if you can try and check whether, one of the positions is closing, you open the new ones and so on. But even doing that manually is working and should be already fine for farming the airdrops, as well as basically just learning about shorts and longs. If you like this video, please subscribe to the channel, of course. I tend to create, I think, pretty informative content on different domains of crypto. More crypto arbitrage opportunities are coming in the videos. I'm going to show you more exchanges. You can also watch my previous videos about different exchanges. Apart from Hyperliquid and Ostium, there's Lighter right now. Day Y, Day X is doing a program with points, so I think that's already cool. And there are a couple of other exchanges where you can try to find different points and basically find this way the arbitrage for you. So thank you for watching. The links to the exchanges are down below. If you would use that would be awesome. Those are the referral links, which means that I'm getting some percentage of the fees, and I think you're getting lower fees, which is a win-win scenario. So thank you for watching, subscribe to the channel, and have fun doing crypto arbitrage.